The second quarter, following on a strong first quarter, was another very healthy quarter for both absolute and relative returns within the select strategy. And it was very IT heavy in terms of the positive contribution. That represented about half of the overall positive outperformance in the quarter. But it was also very broad. There was only two sectors, and those are smaller sectors, energy and real estate, that were a drag on performance. So there was very healthy contribution from industrials, from consumer, and also from healthcare. Each of those three added around 100 to 150 basis points apiece. So pretty broad outperformance from a number of different sectors. The top contributor of performance was a company called Carvana. They're an online retailer of used cars in the consumer discretionary space. And in the IT space, companies like Shopify and New Relic were major contributors to performance in the quarter. In the first quarter, we took some exposure out of companies that were more, had a bit more macro exposure to them, that were more sensitive to the fact that valuations had been massively re-rated post-tax reform at the end of 2017, and shifted those assets and exposure to more of the disruptor camp that had more control over their own growth trajectories as we look throughout 2018. Those companies, those disruptors, saw their valuations be significantly re-rated in the second quarter, and we have been taking exposure out of those areas. So technology was high 50s% of the overall portfolio at one point, and we've brought that down now closer to 40. And again, reinvesting in areas outside of IT and more in the compounders and the evolving opportunities buckets within the strategy. The companies that we tend to focus on have very company-specific stories, and their businesses tend to be more insulated from the macro economy. But with that said, we believe that our companies and we as investors don't operate in a vacuum, and we need to be cognizant of what's going on a broader level. And so that includes paying attention to what's going on with interest rates, inflation, geopolitical, either from a political perspective or from a trade perspective. Our companies eventually will feel a ripple effect from those consequences. And so we need to be mindful of that.